think we're all here. Thank you, everyone. I'll say again, welcome everyone to the Yankee Model Investment Club meeting for July. Sorry about the technical difficulties, but we are all here and accounted for, so we'll kick off. My name is Brent Gall. I'm the president. I'll go through just some real brief introductory slides on the structure of the meeting, and then we'll proceed to take a look at our meeting agenda and go through our normal topics that we usually cover. So, like I mentioned, we're the Yankee Model Investment Club. We are a better investing model club. The term model really means that we're fully functional with real money, but we are open to observation by the public. So if people have questions or interest in what does an investment club do, how do they structure it, what do the meetings look like, that's what we offer to the public. We were formed back in 2008. We're currently 4 members spread across Connecticut, Massachusetts, and California. We went online in 2011, and we currently meet monthly on the second Saturday of every month at 11 a.m. Eastern. We're always looking for new members. No investment experience is required. We mentor any new potential members into the analysis procedures and approaches that we usually do. And there's really no limitation on where you live because we're virtual, except where the state tax laws require the club to file a return. All partners, you must be a member of Better Investing. You're expected to actively participate in the club's activities, and that would include making presentations using the stock selection guide in rotation with the other members, as well as participating in our educational segment that we have on a rotating basis, where we present a small little educational topic each month for the betterment of the other members. For club operations, we follow the Better Investing principles. We show respect to our fellow club members. We have to remember we're all still learning here. None of us are professional investment managers or anything like that. We perform annual audits and file tax returns promptly, and then we follow our partnership agreement and bylaws. So any questions, anything that we don't cover, or if you're interested in joining, you can contact our secretary, Jack Finn, at that email address. We'll have his name and contact info again at the end of the meeting if anything should come up that you want to follow up on. The structure of the meeting, we follow a standard agenda, which I'll bring up on the screen here momentarily. It should also be available in the handout section of the control panel of GoToWebinar. That's probably at the right or left side of your screen. So you're more than welcome to follow along on that if you so desire. During the meeting, all visitors will be muted just to make the conversation between the actual club members go more smoothly. But you can certainly type in questions to the GoToWebinar, GoToMeeting control panel, and Joe Farrell, who's kind of our moderator extraordinaire, will do his best attempt at answering them. And he usually speaks up with more generalized questions if it's applicable to the greater audience. We'll also have a Q&A session at the end of the meeting for kind of open discussion if there's any other unanswered topics. Just before we get started, a disclaimer, we will be discussing some companies in this club meeting. That's no intent that we are endorsing them or suggesting them for a purchase. It's for educational purposes only. We are not financial advisors. We are not suggesting particular things that you should do with your own accounts. So do your own research and make your own decisions. And then from there, let's jump to the agenda. So like I mentioned, this again is available as a PDF in the handout section of the control panel. But this is the standard agenda that we follow every month. The particular topics can change month to month, but the structure remains the same. So we're called to order, and this month I had the honor of doing the educational segment, so we'll jump right into that. Okay. Can you guys see my screen again?
Yes.
Okay. So for this month, I decided to cover a topic that's probably been discussed a lot in the past. Really, how do you find candidate companies to do research on? We talk a lot about the process of analyzing companies and how to get the information on them and everything like that. What opinions and analysis and everything like that. But where's the initial idea come from to determine which companies to research? Me personally, this has always, I think, always been the trickiest part of the investment club approach, or just investments in general. The analysis part is pretty straightforward with researching the various balance sheet values and growth rates and everything else. But it's how do you discern down from the large population of companies ones that are worthy of your time to analyze. So for me, going through this, it kind of opened my eyes to the vast resources that are available online, and it was interesting to see what was offered seemingly for free, or through subscriptions to your library, that's readily available to help with something like this. So I'll just jump into the ideas, and then I have some final thoughts at the end. But the first main topic is online screener tools. And this is basically where if you're not familiar with them, where you go to a website, you type in your criteria that you care about, anything that's a metric for the company, whether it be what stock exchange is on, what their market capitalization is, what their growth rates are, earnings per share, anything like that, that are quantifiable. You can put those criteria into these online stock screeners and have it do the filtering down for you. There's a whole bunch of them available online. I'm nowhere near going to list all of them, but these are just some interesting ideas that I wanted to talk about briefly. The first one Ira shared with us last month from Value Line as part of their online stock screener. I have a screenshot here of what that looks like, and basically the criteria is along the left side. You can pull that into any sort of customized screen that you care about, and feel free to mix and match the criteria. I list this one here just because that they also include in their criteria their kind of proprietary timeliness ranks and other values that Value Line usually appends to stocks that they've been following. So this one is kind of helpful. You can usually access this through a library subscription, and we have information on that for I think in our new member packet that we can talk about later. Another one of these is through FinViz. I put this up here because it is freely available. But there is just a ton of criteria available to filter companies down by. And generally, FinViz is an interesting site that kind of accumulates news articles about the various companies that you're researching. So that was interesting. Another screener tool is through Morningstar, actually, which can be accessible through a library subscription. I put this in here just because they had some interesting preset screens shown here in this box on the left, and the corresponding criteria are shown to the right. So this one is the cash cows, and it just shows kind of the stacking ability of the different criteria, where it's cash divided by assets and looking at free cash flows in the last few years, and free cash flow over sales. So all of these particular criteria lumped together filters down from a population of many thousands down to about 131 stocks. So that vastly simplifies the fields that you would have to go through and analyze to find a worthy candidate of your investment. The other one here was bargain stocks, same sort of thing where it's stacked criteria, but just a lot different criteria itself. So it does look at free cash flow, but it also pulls in PEG ratio, forward PE, things like that. So these are pre-programmed. You can also mix and match, change the criteria as you see fit, but this is an interesting starting point. Moving on, then, investment research newsletters, and I call Value Line a newsletter just for a lack of a better, I guess, terminology. But again, this is, Ira went over this last week, but it's worth mentioning again, that the Value Line survey has a lot of information, not only on just straight analytical values of various, financial information, but also some opinions of the stock market, the economy, and companies in particular. I also wanted to mention here that they have their own pre-programmed screens. This is in a PDF form, but you can still just scroll through the list and see if any ideas pop out at you, where they look at various combination of criteria. If you were caring about high dividend stocks or widest discounts from book value, they have that already programmed into a screen. Moving on, then, it's on the topic of newsletters. Morningstar again has 4 distinct newsletters that they offer based on what you're looking for. Again, these contain ideas for stocks to study yourself, as well as opinions on the companies that they're following. It looks, I think, a stock focused newsletter versus a dividend investor versus a mutual fund and exchange traded fund. So whatever your area of interest might be covered by a newsletter for here. And then these other 2 that I mentioned on this, these are paid services, but they are or have been in the past partnered with Better Investing. Investor Advisory Service is a monthly newsletter that has a collection of stocks that they look at. I think they review 1 or 2 new ones each month as possible buy candidates, and by the same company, but a slightly different focus area is small cap informer. So they focus primarily on very small cap or small market capitalization companies, which has always been a tricky point in finding small companies that are worthy of, that are high enough quality and worthy of investment. So those are some newsletter ideas. Another source of ideas is just popular holdings, like what is everyone else doing? So here is Bivio, that is a paid service if you want to use their investment club tracking software, but on their homepage, which is free, they have a summary of the top club holdings, and also this club index link, which brings up it's like an index of companies held by the various investment clubs that use Bivio. So that could be an interesting source of what are the popular companies that people are investing in. And this is the club index, they said, is rebalanced or reallocated on a monthly basis. Continuing on in popular holdings, in the Better Investing magazine, there are lists again of what are the most active stocks by the investors that are polled by the magazine, as well as the most active buy or sell that could spur you to look further into why other people are interested in these particular companies. I also included here, I forget the article name itself, but it's monthly they go and review model clubs holdings and kind of give them a tune-up or suggestions on how to rebalance or refocus to improve their yield. So you can look at what some of the other investment clubs are holding and see if there's any good ideas there. And then Better Investing itself, in each monthly magazine, they have a featured article on a company to study, the stock to study, or an undervalued candidate. So these are something that you can, follow along the review of in the magazine and do your research to see if that matches what your expectations are. YouTube discussions. Manifest Investing has some free, I guess they're roundtable discussions that they record, I believe it's monthly, and put them on YouTube. There's a lot of great information in here as far as analysis approach, keeping track of your portfolio, looking at gains and losses, trying to discern quality of a company versus what the larger market is panicking over at the particular moment. I think they've recently started a weekly short little discussion. They're calling it the bull session, somewhat tongue-in-cheek, but I think is a way to get maybe a more real-time discussion out available for people to watch. So that's on YouTube. Those are freely available. And then finally, just looking around you. So not even using online tools, but who do you work for if they're publicly traded, products that you use? Are there full parking lots that you drive past that could pique your interest as far as, what are they doing well that you might want to be a part of? Crowded stores. A lot of this, of course, is probably more applicable before coronavirus hit, but still. Great customer service that you encountered, one-of-a-kind solutions that only they have, possibly also known as like a economic moat in Morningstar terms. And then just final thoughts, as I mentioned at the beginning, these really are just scratching the surface of what's available out there. I'm not particularly endorsing any of these tools. Use them at your own risk, but they can be helpful. They generate ideas, but further research is required before investing. You can't put all of your faith in, just stuff that you see on a particular website. Do your due diligence before putting your money after it. And some of these are fee-based, some are free. Just as everyone knows, paying for something doesn't mean that it's foolproof. So it doesn't guarantee any particular returns. Go in with with the idea that you're, spending your own money and want to get the best value for it. So that's that for the presentation. Any questions or comments? Okay. Moving on then, we will jump back to the agenda. Jack, I'll hand it over to you for the minutes from last meeting.
Okay. Are you handing it over?
I thought I handed it over, but it doesn't seem to want me to hand it over for some reason. I'll stop showing. Okay. Joe, are you able to do anything? I'm clicking on make Jack a presenter, but it's not wanting to change it for some reason. Oh, that worked.
There we go.
All right, thank you.
Thanks. Okay. Can you see my screen?
Yes.
I'll try and make it a little bigger. Okay. So this is the minutes from last month. We had 37 visitors last month. All the members attended, and we had we're up to now 6, I think, visitors who have said they're interested in joining. 5 of them attended last month, and of course our esteemed visitor Joe Farrell. The minutes were accepted as presented, and so were there was the treasury report. These were our holdings. 13 stocks, 12 stocks, I mean, and but worth about, what are we up to? 46,000 last month. This is the size diversification of our holdings. It's a little overweighted in large. One of the things we did, one of the reasons we sold Lithia was to change that a little bit, although there are other reasons. So it's better now than it looks like here. We have a few stocks that are pretty high in a large percentage of our holdings. Alphabet and Dollar General around 12, and Regeneron around 11. Not too bad. Steve presented Intelligent Systems last month, and we decided we liked it, so we sold all of Lithia Motors, LAD. And considered buying Intelligent Systems, Middleby, Gentex, and Ulta. Those were all on the table as things we could buy. We ended up deciding to buy Intelligent Systems, about $10,000 worth, and put the remaining cash into Middleby. That the goal was to try and make both stocks at about 8% or so. Ira presented an interactive demo of Value Line beyond the reports, the stuff in the Value Line besides the reports themselves. Liz Tobin agreed to give the stock to study presentation for this month. Sriram Matabushi agreed to give the stock to study in next month's meeting, and Brent's going to rearrange the schedule. So this month we already saw Brent presenting. The new member packet is up on Vivio, and you should have access to it. We also have been putting up the recordings of the meetings on YouTube, and I put a link there. We had, I think, 30 visitors to the YouTube channel over the last month. 3 people actually saw the whole thing, so that's nice.
3 more than I would expect it. That's good.
More than you expected, yeah.
Yeah.
We're now part of the Visit a Club program. Just another spot in the Better Investing website that people can find us and register for our meetings. We had a few questions from visitors about INS and how to access Value Line. So we tried to answer those. So on this month, we put the June minutes, and oh, I forgot to put the becoming a member document up on the handouts. The meeting agenda and the minutes are up on the handouts in the webinar this month. And here are all the 37 visitors, and we also have Maryland Westmass has expressed her interest in joining, but didn't attend last month. And that's it for the minutes for last meeting.
Okay, thank you. Very thorough. I don't have any changes or objection to accepting.
Great.
Okay, moving on then. I'll hand it over to you, Ira.
Okay. Okay, you see my screen?
Yes.
Yep.
Okay. So here's the current holdings. We have $720.56 in cash. Member status. Transaction history. So you could see we sold Lithia in pieces.
I sold it all at once and it sold in pieces.
We bought Intelligence
That's a lot, I guess.
also in pieces.
Yeah, that was me.
55 shares of Middle League and another 200 of Intelligent Systems. Average price about 33 and a fraction.
Yep.
And we picked up dividends. Most recently here, you can see Visa 18, Tractor Supply, and Essent. And member payments are up to date. Performance benchmark. So since inception, this jumps around quite a bit, 11.9% versus Vanguard 500, 12.4. And looking shorter term, $18.2 versus 18.6. And investment performance report. Regeneron is topping the list. Tractor Supply, Dollar General. And member performance report. Any questions?
No, looks good. Thank you, Ira. Okay, it's now time for the stock to study. Liz Tobin's going to be presenting Miller Industries. Joe, do we need to pull her over into the staff tab to make her a presenter?
Give me a moment.
Okay.
I'm going to make her presenter from where she is and
Okay.
turn her. Her microphone is now on. Okay.
Okay. So show my screen. Do you want me to put up the your template on my screen?
Yes.
You want to see my
Yeah,
assets?
generally it's up to you as far as how you do the presentation. Like previously, we've usually used that template, the Excel file template, kind of as a guide to walk through to make sure we touch on everything, and then we usually bring up the SSG just so you can show, the visual analysis part, how you came to the growth rates that you decided on, high and low PEs that you decided on, things like that.
I'll start with the template, and then we can switch over if need be.
Sounds good.
Okay. So can you see my template here?
Yes, ma'am.
Yep.
All right. So great. Well, thank you for the opportunity. This was my very first SSG, and I chose Miller because I was looking for a small cap company because I know that that's underrepresented in the club's portfolio. I found Miller through the Better Investing site, looking at, I think it was the Hot 100 that clubs had or something like that. Not quite sure how I stumbled on it. So Miller is a small cap. It's traded on the New York Stock Exchange. Its main plant is in Tennessee, and it also has manufacturing operations in England and France, and it makes like wreckers and tow trucks and sorry, I'm looking over here. I go down, you'll be able to see. Wait a minute. Okay. So I have all my information in different places here. So I'm gonna go to here. Okay. So it manufactures vehicle towing and recovery equipment. Wreckers, tow trucks, car carriers, trailer bodies, and heavy equipment carriers. And it mainly sells in North America, Canada, and Mexico. It does have some markets, including Europe, the Pacific Rim, the Middle East, South America, and Africa. And mainly it sells through distributors, so it doesn't sell direct to consumers. It also engages in government contracts. It was founded in 1990, and it's an interesting small cap because it has a long history. So my methodology is that there wasn't a lot of information from the analysts around future growth. So I took the average of the last 5 years sales and reduced that by 30%, just because I know that we're in this downturn. And then I took the average of the last EPS and reduced that by 50% on Jack's recommendation. And I also had trouble updating today's price on my SSG. So the closing price yesterday was $28.43. So let's see here. I'll go down here. So so I got a future sales projection of 8% after I made that that adjustment, adjusting it down by 30%, and then I got the future SSG ES. Okay, now I'm
Earnings per share.
Thank you. So that should be EPS, right? So I got 12% on that after adjusting that down by a little bit more than 50%. The management has been in place. Many of the key team members have been in place since the company was founded, and Miller Senior is actually a person, and he's he's been there since he founded it. His son is also one of the key players, and there are a number of other people that have been there, as I said, for quite a long time. It seemed to be a pretty forward-looking company, although I did wonder why, after 30 years, it's still a small cap. However, they do seem to invest in their workers. They have a lot of programs for their technical workers. They have a welding school. They also have Miller University 1 and 2, where they identify up-and-coming people that might be good leaders in the company, and they groom them for positions. They did a lot of plant upgrades. I think that's where their debt came from. A lot of plant upgrades, installing robotics. That was over the past 5 years. So let's see, their pre-tax profit margin is 5.36%. The earnings on the equity, the row is 12.58. I put it the current PE is 9.1, the projected PE is 9.1, and then the PEG, I got this from my SSG, was 8.1. With the PE, the EPS of 12 gave us a 0.7 on the PEG. Value Line says that the industry is not that great. It's in a considerable slump, and that is probably going to be even more severe due to the pandemic. Just to backtrack a little bit, I did notice on Miller's annual report that was for the end of year 2019, they were already talking about the coronavirus and what they were going to do. So it does seem to be that they're on top of things, and they're, like I said, they're forward looking. So I was pretty impressed about that back in, probably January, when they wrote that annual report, that the virus was on their radar and they were already making plans. They did do a little, they got some credit in preparation, just in case they needed it, back in the first quarter of this year. They took out some loans just in case, to see them through. So so there's a lot, there's a lot to recommend the company, and there's a lot working against it that right now are out of their control. There's the pandemic. They're facing supply chain disruptions, possibly. They are subject to increases in their commodities, specifically steel and aluminum. They are subject to the tariffs. Their distributors are also vulnerable if there's a credit crunch. And they have this thing called floor financing that one of the major providers of floor financing has left the industry. So even if Miller can sell the products, there may be maybe their buyers won't be able to buy them if the credit tightens up. They also do a lot of their marketing at trade shows, and they also market for their distributors. So the company could be in for a rough couple of years. On the upside, as I mentioned, it seems to be well managed. They're taking precautions, it seems to me, to weather the financial uncertainty. It's a mature company. The management has seen it through the Great Recession. I think they're resilient enough to make it through and recover. The question is, whether this is a sector that is good to get into at this time, I think. So according to my SSG, the high price for the next 5 years is 55. The low price I got from the historic low, which was back in, like, the historic low of the last 5 years was back in 2018 at 22.8. So the zoning, my SSG showed a buy up to $30.90, and the upside downside ratio is 4.4 to 1. The relative value is 76.1, and I noticed in the notes on the SSG that Better Investing says anything below an 85% could indicate a red flag. Maybe there's something going on that we don't know about, or it could be just an excellent value. So we don't really know. So the potentialized annualized price appreciation I got was 13.9%. The yield is 2.5. This stock does pay a dividend. The annual rate of return is 16.4, and the current yield is 2.5. So I think if it weren't for the pandemic, I would say, yeah, this looks like a good company and it looks like the growth is there. However, given the fact that we're in uncertain territory here, and the club has already said they didn't want to do autos, which I didn't remember that from last month. I'm just wondering, does it make better sense at this time to look for a small cap in a sector that maybe does historically better in a recession? So, so that's my template. Would you like me to move to my SSG?
Yes.
Yes, please.
We have one question from the audience. They wanted to know why you dropped from the 50% to the 30% in the early projections, and it was at Brent's recommendation. I think maybe a little bit more explanation there would be appropriate.
So initially what I did, I had dropped the sales and the earnings, my projected forecast, to 30%. And then I sent my SSG to Jack, and he said, well, your peg is kind of off. So why don't you take down, I think it was it the sales that I said at
The earnings, I think.
the earnings, I took that down to 50%, cut it by 50%. So it was a judgment call. So let's see here. So I have my SSG up on the screen, and is there something I need to press here to share it with you guys?
No, we
No,
can
No, we
see
can
it.
see it.
You see it, okay. So I have the core SSG, so just showing. So as I mentioned, I did have a problem updating the study. As you can see here, the closing price is still at, it wasn't pulling in yesterday's close. So is there a particular screen you'd like me to show, or you just want me to go through it?
Yeah, I think just I'm less familiar with this online SSG, but normally what we just do is, yeah, scroll through the various stages of the SSG. You can highlight on, like in this one in particular, if you discounted or removed previous years, kind of what the thought process was behind that. But we don't have to spend a ton of time on this.
Okay, so yeah, you can see that I only took the last 5 years, and I think that I got that from watching the Better Investing videos.
Yep.
Okay.
So historical sales. So the sales look good. They're up a little. They're a little bit down in the first quarter. You could see that they were down in the first quarter of this year by 10.7%. And then we've got the earnings per share here, which was down the first quarter of this year by 36.8%. So I maybe could have knocked my earnings down even a little bit more, but I thought 30% was, I was trying to be conservative. Maybe I wasn't conservative enough. We shall see. So here's the chart there.
Yep.
And okay. Management. So you can see they had, let's see here. I'll show you the debt when we get there.
Yep.
There we go. So they kind of had a spike in debt here for the first quarter of 2020, and I think that was because they had taken out some loans just to be on the safe side. But you could see their debt was actually coming down after they had done all the plant upgrades. So their debt, they seem to be using the debt wisely in that they're putting it back into the company, poising themselves to be more efficient in their manufacturing.
Can you show the next tab, the percent of capital that's debt, percent of debt to capital?
Here it is here.
It's still just a little over 10, right? Almost 11, I guess.
Yeah, I wasn't quite sure what, like, the percentage change is 10.7. So that means it's down from last quarter. I wasn't quite sure on that. So,
Yeah, I'm not sure what that means, what that's referring to.
okay. So there you have that. And then forecast the earnings. So the growth rate was at 25.9 and I knocked it down to 12. So I'm like a little bit more than 50% thinking that their growth is going to be really impacted here, which gives us the projected 5-year EPS of 6.04. And then assess the risk and reward. So the PE was 9.9. So I chose the recent market low for the projected low stock prices and this was from 2018. Here's our chart here. So we're in the buy zone.
Yep.
So we've got a couple more dollars to go to still be in the buy zone here. So our upside downside is 4.4 to 1, and I think that Better Investing's recommends 3 to 1, so we're in that zone. And then our 5-year potential. So as you can see here that I took the 33 and knocked it down by 30% to get 23. And then this is where we're at here with our price appreciation or yield. So we're still in the zone of 12% or better for growth for a small cap, even with reducing the numbers down like I did. Okay, so that's the SSG.
Excellent.
Thank you, Liz.
Yeah,
Okay.
thank you. And you said this was the first one you had done?
Yes.
Oh, okay, very impressive.
Thank you.
Yeah, so I'll just start off. So normally, as you know, and everyone, we kind of go around the table and give our own comments on the company. I looked at it, and I just want to throw out one rule of thumb that I've heard from way back when I first started Better Investing regarding revenue growth rates versus earnings per share growth rates. So what I normally do is, if you think of revenue as the raw money coming in the door, and then the earnings per share is how much they can turn that revenue into actual profit. On the short-term basis, they can probably increase their profit percents at a higher clip than revenue if they do, efficiency improvements and other things like that. But at some point, you're not going to be able to grow revenue, grow earnings faster than you're going to be able to grow revenue. So I think for me, looking at the historical values, I agree that like the historical growth rates was, I think, around 10% or so. Earnings per share historical was around like 14 or 15. I normally limit the earnings per share growth to be no more than the revenue growth rate. So I knocked the revenue growth rate to around 8% and then carried that over to be the same projected growth rate of earnings per share. So I think that falls in line similar to what you did, Liz, with, I think you knocked down earnings per share growth rate by 50% or so. But it just as another idea point, I kind of set the growth rates to be equivalent, just so that we're not thinking that we'll be making money out of nothing. If we don't have the revenue coming in, we can't change that into profit.
Mm-hmm.
Otherwise, yes, this is an auto company. I think we divested from Lithia, like we said last month. It does look like a nice, healthy small company. They're not going gangbusters, but it looks like that, in years past, they've been able to, the visual analysis of the revenue and earnings per share kind of matches our up, straight, and parallel guidelines, which is good. Looking at when they started, 1990, I'm like, oh, that's a pretty young company, but of course that's 30 years ago, which just tells me how old I am. But it is, I guess, interesting that, yeah, they have been able to grow it at a pretty good, consistent level over the previous years. Whether it's a wise play currently with the coronavirus and everything else, I'm not sure. I haven't recalibrated myself to know that. The auto market is, always kind of finicky. But this is auto related, but it's not really consumer auto, if I'm understanding correctly. It's like tools to deal with other people's cars, wrecking services, things like that. So even if the auto industry takes a downturn and new cars are not being sold, I would imagine older cars will still break down. People will still park in, unallowed locations that need to be towed away. So that might kind of decouple this from the consumer automotive market. Like I said, from the SSG, I did 8% across the board for growth rate of revenue and earnings per share. I decreased the high and low PE judgments down to 12 and 8, respectively, just looking at the previous years. And like you chose the recent market severe low, I think, is the low price. And again, did get it in the buy range. I had a 5.7 to 1 upside downside ratio with the high up to $60.50. So for me, it looks like a promising company. Nice low debt, I think in the 10% range to total capitalization, which is nice. So yeah, overall, it looks like a promising company. It didn't have a lot of analysis, like opinion stuff that I could find, but looking at the SSG, it does look promising. Anyone else want to comment?
Yeah, I ended up with an SSG that's very similar. And I did find a couple, excuse me, I found a couple of first look reports on the Better Investing website that included an SSG, a couple SSGs, and one of them was from just last month. So I didn't get an analyst estimate, but I got these guys' estimates of things, and they're in the same kind of range of somewhere around 9 or 10% growth of earnings, and similar numbers of 10 or 11% in I'm sorry, 9 or 10% in sales and 10 or 11 in earnings. So I ended up with a buy zone. I think it's up to 32 or something. Yeah, I think that's what it is. Yeah, it's a buy up to 31. Okay.
Okay, thanks.
If you want to make me presenter, I'll show you something interesting.
Okay.
Okay. If you have SSG Plus, you could go to Community Notes, and there are 2 recent comments on the stock, which I thought you may want to glance at right here. It gives you an interesting perspective. There was a first cut on it analysis recently. It's not the first one says it's not a growth stock, but fiercely well-run small value company. Dividend and low debt is attractive. Second one talks about the risk of credit. Let's see.
Doesn't it say here that most of their stuff is made to order?
Yeah.
So they don't have a lot of inventory lying around.
Yeah. So I thought that was interesting. Anyway, my SSG is very similar. I had sales about 5-6%, earnings per share about 7%. If you look at free cash flow, it's kind of jumping around all over the place. The quarterly data shows that earnings per share for March down 37%, sales down 11%. I have a buy also up to 32. However, I would want to wait at least another quarter to see how they're faring in this pandemic. So I wouldn't, it's at the upper end of the buy range right now. That's what I have.
Okay, thank you. Stephen?
Yeah. So one of the things that caught my eye about the stock is I went on Fidelity and I did the comparative analysis against the competitors. And one thing that really I thought was very interesting was how minuscule their float was. So they have a very small float relative to the industry and relative to I thought how much money they're bringing in. Their annual revenue is like $800 million. So they're almost at $1 billion in revenue, and they had a very, very small float. So if this thing pops, it's going to pop big. But this is a steady Eddie kind of a thing. It's not something that there's a constant demand to replenish wreckers and towing equipment. So I don't see a huge pop in it, but what you could happen is, of course, when road miles are down so much, then there's going to be a pent up demand, and then you're going to see a spike. That'd be my guess on how that's going to go. The other thing that I liked was Fidelity's the analysts are bullish, and it got a pretty high rating, like an 8.3, which I thought was very good. Another thing that I liked was that it's what was it? Yeah, it makes more than comparative companies that have higher market capitalizations. So this means to me that it's undervalued. So I really like that a lot. So I really liked. So for example, a competitor is Expel, and they're some kind of an auto component company, and they only make $133 million a year, just trailing 12 months. Yeah. So, but their market cap is 400 million, and then Miller's is 324 million. So, I thought that was excellent. And then that also holds true. There are other ones that are similar. The other thing that I thought was interesting was the product line is pretty wild. They've got this 100-ton rotator, and I was thinking, where have I seen that before? Well, I drive through Danbury all the time, which is disaster central. So every once in a while, you'll get a rolled over tractor trailer. And one time I went by, and there were lights I had never seen on, and I can guarantee you it was one of these rotator things, because the tractor trailer was down in the ditch and it had to pull it out. So this is the equipment that's used. And so I happened to Google how much do one of these things cost, and they're 1.4 million a pop. So, but I can only imagine what they charge to write a rolled over tractor trailer. And that's what the use case for their product is, right? So their high-end heavy-duty stuff is massive, huge Tonka trucks. So, that's right up my alley. I love that kind of stuff. But anyway, so SSG land, where does this fall in for me? I subscribe, so it all pre-populates for me, so I don't touch too much, to be honest about it. And my buy price is up to $31.20, which seems to be right in line with everybody else's massaging of the numbers. and my risk to reward ratio is a 4.6. So it I don't know. I guess this is really one where I'm on the fence. They have a very steady market, but the real kicker is when does the vaccine come out? I think once the vaccine comes out, then you'll have garages that, hey, that's who the end customer of this is garages, right? Mechanics that are going out and doing this towing. Right, everybody is in hunker down mode. No one's spending right now. But when things get back to normal, I think they're going to probably be a big recipient. The issue is, and I think to Ira's point, exactly, is probably wait another quarter. I would put this on the watch list most definitely. It's just, but then again, I totally misjudged the March. I never dreamed that the market would come back this fast. So this might be a decent time to get it. I don't know. But I see trouble ahead with the election quite a bit. So I don't know. I probably would defer to caution and be in more in Ira's camp. So that's my analysis. Thank you.
Stephen, can you remind us just what float means?
Yeah, so that's the amount of shares that are available on the stock exchange. And so let me I just had it up. So they have 11.4 million shares, which is like tiny. So if someone comes in and buys,
I don't feel it.
That's
muted.
So if someone comes in and buys, then it's that 11.4 million shares that has to trade. So it's a relatively small amount. And that means that once the buying starts, this thing is going to really, it helps it by having a very small float, because there's less supplies and there's more demand. Well, it's going to shoot up more. So it hasn't been, there's a term for that. When you put too much float in it, it like waters it out, but there's a name for it. But so this hasn't been watered out. This is still like solid. That's what it is.
Gotcha. Okay, thank you. Okay, great discussion, everyone. Thanks for all the comments. Why don't we move on to?
Could I just say a couple more
sure.
things?
Go ahead.
So what I didn't mention was that in addition to the actual manufacturing, they're also big on innovation, and they have some patents on their mechanisms. So that's another sort of moneymaker for them. One of their longtime patents has just expired, but they do have a number of other patents out there, and they are actively looking to develop new technologies. And they don't just do the tow trucks and the wreckers, they also do equipment movers like flatbed trucks. Like the other day, I was thinking about this SSG and this stock and what should come under my window, but a big flatbed truck from Home Depot delivering roofing supplies to my neighbor. And so I wondered, is that MLRs? They do make to order, which is a double-edged sword for them, because they're not making stuff that's going to sit there and not get bought, but they have lost out on a number of government contracts because they couldn't deliver immediately, because they had like a back order of like 4 months wait to get the vehicle. So that's it. Thank you.
Okay, thanks. All right, moving on then in the agenda, let's proceed now to reviewing the existing stocks in our portfolio. Ira, if you want to, or if you can, bring up the current holdings on Vivio.
Okay. Mm-hmm.
Thank you. So for me, yes, thank you. Fleet Core, I really couldn't find much interesting news at the moment. It's still a somewhat stale value line back from early May. It's currently in the hold zone, $253.55 a share. Our buy range is up to 233. Athene came up with a new value line. It basically rehashes the challenges that they were faced in earlier in the year. They reduced the earnings per share outlook for the year by $2.80 in regards to the challenges that they mentioned. They did agree to reinsure 27 billion for Jackson National Life Insurance, and that's projected to increase Athene's company assets by about 20%. And they're also investing 500 million into Jackson, which will equate to an 11% stake. I currently have them in a buy range at $29.51. Our buy is up to $49. But similarly, they've had some challenges with earnings per share and everything, so I don't know if it's a wise investment to jump further into them at the moment. And then Tractor Supply, these guys are just going gangbusters. The stock price is soaring. It's currently $137 a share. Our buy is up to 66, so it's well in the upper echelons of our hold range. They're currently working with Miranda Lambert, who apparently is a country music star. I can't claim to know her or know of her music, but apparently she's popular. And she has a Mutt Nation pet food, or a Mutt Nation pet product line that they are partnering with Tractor Supply to roll out a pet food line. The overall partnership started last year with just regular pet products, but pet food line is starting here in the month of July, as well as Tractor Supply has announced a multi-year sponsorship agreement with the American Kennel Club. So they're putting their, I think, trying to make themselves more of a household name and working with pet-centric companies, as people continue to hunker down and only see members of their family and their pets throughout the day. So to have more focus on pet supplies and pet products than, or expanding their scope from what they're doing currently. And that's it for me. Steve?
Okay, so to make sure I'm not muted. Mute.
Yeah, we can hear you.
Oh, great. So for Middleby, I think this article sums it up. The article title is "The Premium is Gone, but Longer-Term Demand Destruction is a Real Concern." And so what's funny, at least to me, is I'm too cheap to pay for the premium alpha, Seeking Alpha, to read it. But if we dissect the title, "The Premium is Gone" means that when it was down in the mud in April and May when we bought it, that cheapness is gone from it. And now what I do have issue is the longer term demand destruction is a real concern. So I think to me that's more in the short term, where I can guarantee you will not catch me in a restaurant until I have a vaccine in my body. But once that happens, we're going to go out like crazy again. So what I think is you have to hold this. People have to eat. There's no choice. You have to. And they want options. So I think once that this is settled, that this thing calms down, this thing is going to go up. So, and I have this in the buy zone. The price is currently $74.34, and I have it up to $104.70. Also, there was an analyst that lifted the price target to 85. Switching to Alphabet, ticker symbol Google, Goog. So let's list all the bad things. There's a digital tax war with the French. There's a European antitrust probe, and a really this is the fortress balance sheet of all fortress balance sheets. Who cares? So what my risk assessment, or the real problem is, from what I've been reading this month, is if we have a Democratic sweep in November, then all the trillion-dollar companies, and I think there's 4 of them, they're at risk, right? So if we have the Senate and the House, God forbid Elizabeth Warren gets her knife out, we're in very big trouble here. So that, to me, that's really the not the idiosyncratic risk, but the systemic risk for this. Otherwise, it's absolutely doing phenomenal. I have it as a hold. The current price is $1,362, and I have it. That's my hold price, and then it's currently $1,541. So I'll probably get a lot more nervous after the election if we get a full Democratic sweep, depending on if they come to the center or if they're hard progressive. I don't know what's going to come out yet, but I think that's really the risk to this, and the only one. The other ones, they just, $1 billion, here you go. We make that, we make more than that in a week. So turning to Visa, there wasn't a ton of news, but there was a little bit of risk that I identified. What's happening is, because the Visa card actually works when you go to like South America and other cards don't, people kind of like Visa. So the European Union banks are trying to take on Visa and MasterCard. So, and they're not going to be ready this year. They're not going to be ready next year, but they're going to be ready in 2022. So that's going to be something to keep an eye on. Also, Visa was mentioned as there. I read an article about which companies are most likely to be the next trillion-dollar company. So Visa has a market cap of about, I didn't look it up exactly, but it's in the $400 billion range, and it has potential. So, but a smaller one. So I think that this is another hold. My buy price was up to $154, and the current price is $192, so it's in my hold range. That's what I have. Thank you.
Okay.
Okay, moving on to Regeneron. Regeneron reports earnings on August 5th. Their price is $6.20, which for me is really at the upper end of the hold range right now. I have a buy of around 440. The good news on Regeneron is the government, under Operation Warp Speed, just gave them $450 million for their phase 3 antibody testing. So a lot is hinging on that. And, I think we should hold it and hope for the best with their phase 3 trial. Gentex, I have pretty much at the upper end of the buy range or into the hold range, depending on the day. They don't report earnings till July 24th. So I have a buy up to around the price it is right now. Intelligent Systems is a new one for us, is also, on my analysis, up at the upper end of the buy range or into the hold range. Price is 32 or so. I have a buy up to 34 or so. The Intelligent Systems, they're saying, could benefit from the recent collapse of the company called Wirecard in Europe. I don't know if you've heard about that, but due to a scandal at the very top of Wirecard, that company is really dead in the water. And Intelligent Systems in a very similar business could benefit from that. That's what I have.
Okay, Essent is down a little bit from last month's price. It's also, it is in the buy zone. They reported in May, I think, and they're not due to report for till early August, I think. There was a little news on they AM Best did I think I reported last time that they did a stress test, but AM Best released some more details about it. They ranked Essent as an A for excellent in financial strength. And after doing the stress test, they assessed Essent's risk-adjusted capitalization as at its strongest level. That's the strongest level that it gives out. So I'm not sure exactly what that means, but just that they address how much money they have versus how much how many defaults they're expecting because of the coronavirus, and they might be wrong about that, but that's good news, I think. Dollar General is doing good. They've been going up again. They're a little off their absolute highs, but it's not much different from their absolute highs at 188. Their quarterly results were good, and I think that's still driving them somewhat. They're in the hold zone for me, and there's no news for them. Ulta Beauty is down quite a bit from the last couple of months, down about $30 from 226 to 195. They of course are suffering from the news, from the corona news, the spike in cases in several states. They're still in the hold zone for me, and that's at least partly due to to my uncertainty anyway about what kind of earnings they're going to have anytime soon. That's it for the the review of the stocks we own. We also have a watch list update. Five Below is in the hold zone. Viva is in the sell zone, and DR Horton is in the hold zone. And Steve, I think I still need your SSGs for Viva. And are you the one that did DHI?
Yeah, Viva and the last month's.
Yeah,
I need to upload those. Yeah, I didn't do it yet.
Great.
Sorry.
Thanks. That's it for me.
Okay. Do we have any buy or sell proposals? And Joe, just if you can hear us, I put you on mute. There was some background noise, so feel free to unmute yourself.
Unmuted.
Can't do it. Let me know.
Taken care of.
All right, thanks.
I'll suggest we buy Miller just to see if we can see what happens when we vote.
You're gonna track it?
Sure, I'll put it on the watch list.
I guess I would be okay with Miller. It's a little bit of a, I mean, it'd be $700 So it'd be, our smallest holding. But I guess it's based on the decoupling, like I mentioned, of it's not really consumer auto. I don't think it's more. It'll be needed regardless of whether people are buying new cars or not.
Brent, so just so I understood, so are you suggesting that we only put in the $720.56 that we have? Because that would be my thought process, is that because we've done this before where we bought companies just before their earnings came out and we didn't buy too much, and then when their earnings came out, we jettisoned them if they weren't appropriate. So this might be one of these cases where we could get a little bit, and then if it holds, that my fear is that it's a small cap, so it's going to be less liquid, and that gets punished when the market goes down. So when the market goes down, what gets rewarded is mega giant caps that are extremely liquid. And I'm guessing, I'm going to go out on a limb here, that perhaps November might be a little volatile. So I don't know. I think the small caps are going to have a really rough time during that period, simply because they're not liquid like the giant mega caps that we own, that the market loves during downturns. So I would be for getting it, but just putting in this month's allocation.
Well, I think, I mean, if just for fun, if you want to put in 720, which is not going to move the needle one way or another, and you just want to have some skin in the game, go ahead. Otherwise, I might be inclined just to keep the cash and wait till it accumulates a little more. But if you want to do it, go ahead. That's all I can say about it.
Yeah. Normally we would, I mean, with the holdings we have, it would represent what, like 0.4% or something of the overall total.
0.5%, yeah.
0.5%. Normally we would like liquidate or sell off some of our other holdings to really kind of boost that.
Yeah,
Okay.
I agree. Let's spend $700.
Okay. I think it's, IRA's sounds like against, and then there's kind of 3 lukewarms for. So it's, we don't have much skin in our game, no commissions. So the only thing would be the burden of tracking it. But sounding like, we'll go forward with purchasing Miller with the available cash. And the single share price was well below $700, right? It was like 28 or 29 or something.
It's 28, 28 or 29, yeah.
32 is the current.
Oh, is it?
Yes.
I just checked on Ameritrade and it said 28 something is the close.
Got to buy it quick. It's already going up.
Yep.
Okay. Any other buy or sell proposals? Okay, hearing none. We'll move on in the agenda. I didn't have any old business, but I guess one new point for new business, and I can put the agenda up here. Let's see, I'll take presenter rights back. Okay, for new business, just club renewal is coming up due in September. So we have a bit of time, but just wanted to get people thinking about it again. I don't know if everyone received the kind of same email that I did, but they basically summarized, the dues that are required for the club, and then the individual membership fees. I know last year it was a bit of a, I don't know, I guess a mess or difficulty. Ira can chime in more, but where we, I think, individually contributed to the club's bank account, and then Ira cut the check. I saw, funnily enough, when I was doing the research for the educational segment, I think there was some forum posts on Vivio about this exact topic, where someone had paid money for dues, but then they were allocated shares of the investment club inaccurately, and several people chimed in, asking why are you trying to combine the payments and have the club pay, just have the individual members pay directly to Better Investing. So I believe, unless there's any objection from our members, that'll be the approach that we'll take this year for individual club member fees. I think the club dues, though, we can probably have Ira cut a check from for the club itself.
That's the way to do it. Yeah, keep the individual separate out of Vivio.
Right.
That's the path all of my clubs take also.
Okay.
Yeah.
So just decide you want 1 year, 2 years, or 3 years, I guess, is the only decision, isn't it?
Right. And then there's, for the individual, at least, there's you can opt into the little upgrades that's at the bottom of the screen here for the online SSG, or just the the data service if you want that. So I think there's an online calculator. Nancy is still on our roster, so we'll correct that going forward. And I know that Liz has applied to become a member, so I'm not going to submit this until kind of those questions are finalized. But I just wanted to get this in front of people to know, to confirm that the changed approach, that we'll each send our payments in separately, and then to be thinking if you wanted any sort of additional upgrades or anything, to include that in the fee. But we can discuss this further over email and get that straightened out.
Nancy's not on the roster.
She was on the renewal roster for the club that I got from Better Investing.
Really?
Yeah. Well, I think we left it when she left that she would just remain, so that it wouldn't screw up her membership or anything else. It would remain on the Better Investing's roster. We took her off of Vivio and those sorts of things. But now at the renewal, we'll remove her and make any other changes that are needed.
Right.
Yep. Okay. Let's see, back to the agenda then. We have Liz Toba's application. We'll discuss that after we adjourn the meeting here in a few moments. Then just wanted to highlight the plans for next month. I'm hoping that Sriram is still on the docket to present the stock to study. If he's with us today and we can unmute him just to confirm, that's still the plan. And then Steve, I have you for educational segment for August.
Okay.
Do we have Sriram with us today?
Say that again, I missed it.
Yeah, Sriram is on.
He is.
He is, okay. Let me see, can we? He's self-muted. So if you can hear us, Sriram, and if you can just let us know if you're still planning to be able to present the stock for next month. We'd love to have it.
Yes, of course. I'm planning to be. If anybody have any suggestions for any stocks to study, please let me know. Otherwise, I will come up with a couple and reach out to you, and maybe you can help me with the study.
I think that would be good if you come up with, however you choose to, filter down to some viable candidates. Take a look at a few and then we can discuss by email. I think that will work out.
Absolutely. Unless if anyone has a really good candidate you want to study, please let me know. That way I can include in my shortlist.
Okay. Do you have the template form that like Liz went over today? Have we
Yes.
shared that with you? You
Yes.
do already? Okay, great. Okay. Any other business topics that we need to discuss?
I'd like to talk about one other thing. I'm going to take the screen for just a minute and show something to the group, if you will, that has
Okay.
to do with being here. We had several people that were registered as that registered basically show up twice on the list of attendees. I just want to show, if you're not a member of Better Investing and you go to betterinvesting.org website, you get a screen that looks like what you see on right now. If you click on Meet Our Community and go down to Our Local Clubs and click on that, you'll find web-only chapter, online chapter. You go there and you look at local events and you'll find today's meeting and next month's meeting and the following month's meeting. All you have to do is click on one of those and you can register to attend this class. And that's for the people that are not members that are showing up as a second registration. If you're a Better Investing member and you don't know how to get there, you've been doing it from some other source, if you're a Better Investing member, you can get there by sliding down to Visit Other Clubs, and you get exactly the same screen with online chapter. Go to local events, and you see the same thing where you can log in for yourself. We have 5 people that are registered, or that are registered today twice, and that's because they've passed it off to somebody else, which is fine, but we do want an accurate name to go with our attendee list, I guess would be the way to say it. This is the quickest way for each person to have the opportunity to register for themselves. That's all I had. You can have the screen back now.
Okay. All right. Thanks, Joe. Were there any other big questions or comments or anything from the question box that is worth sharing with the team?
We had one person that asked about the possibility of getting a copy of your education presentation, the slides themselves, the PowerPoint itself, and
Yep.
that's difficult to move, but I will pass that information on to you, and you can attempt to send it to him.
Yeah, I think we can. I'm certainly okay with if we post it in the public folder where
I don't
Jack
fit. I don't
yeah.
think it'll fit in the public folder. PowerPoints are very large, and the total amount of space that we're allowed on Vivio, they don't fit. I've tried it before.
Could you put it in the handouts next time?
I could do that, if that would be okay.
And people could open it and save it.
Yes.
Sure.
If I'm trying to, I don't remember the size that's allowed. That might be a problem because of its size there also, because they do have a limit to the size of any particular thing that can be put in. But I'll take a look at it. I can't do it while we're online. It doesn't permit me to go in and make any changes, but I will look at it, and if it will fit, I'll do it. How about that?
Will it help in saving it as a PDF file?
Well, he said he didn't want the PDF. I offered that. He said he wanted actually the PowerPoint itself.
Oh, okay. I think that was going to be my suggestion also.
That would be that was my first suggestion also.
Yeah.
I think I have one PowerPoint up there. I can't remember whose it was, but I guess some PowerPoints are small enough to fit.
Yeah, if they're
Depends
small enough, you can do it, but otherwise, no. We also have another person that is interested in pursuing membership. I apologize if I mess up your name. Ani Kashhan, Anikhachian, if I got it correct here. would like to pursue the idea of membership. So we will follow up with you also.
Okay. Excellent. Well, thanks everyone for sticking to the end. Thank you for attending. Our next meeting is again second Saturday of each month, August 8th, 11 a.m. Eastern. Like Joe demonstrated, if you're not already officially signed up, please go to Better Investing and register, just so you don't miss any the link or any other pertinent information. If you have any questions that were raised that you didn't get a chance to ask or that you think about after we hang up, feel free to contact Jack Finn at the email address on your screen. And that could be questions, comments, or if you're interested in joining the club itself.
Okay. The requester on the PowerPoint has come back and said PDF would be okay. So if nothing else,
Great.
it will be in next month's list if we don't get it directly to you. Be in next month's handouts. One way or the other, you'll get it.
Okay, and Jack, I'll work with you over email to see how we can get it up to the public folder if that works also.
Great. Good.
Okay. Okay, thank you everyone. A great meeting. Thank you, Liz, for the presentation. We look forward next month to Sriram's presentation as well. And other than that, everyone be safe and hopefully see you next month.